Welcome, folks, to another Monday video from TheoTRADE. What a fitting day, I guess, for the market to be higher as we're remembering 9/11, the tragedy that occurred and the many loss of life that happened on that day. And man, you think about where were you at that moment? I was sitting on the couch, putting on my shoes, ready to work as an advisor, and I'm watching CNBC and watching as the plane hit the I didn't see the plane at the first tower. I was watching the news report after the first tower, and then saw the plane hit the second tower. And man, what a crazy day! And this is a time to kind of remember, what differentiates us as a country, our Constitution, our understanding of God-given rights, of freedom and expression, and just the notion that all of us are created equal, and how that stands as a ultimately, people will want to do things to you for wanting to stand for the notion that all men are created equal. Anyway, let's get going to the market. So the S&P is up 0.62% today, and I know this looks like a really large bounce in the market. The Rago, we have a contract change event that added about 50 points to it. If we look at today's trade during the cash session, what we see is the S&P closed about where we opened the session today. So as a function, we really didn't gain any further traction throughout the course of the day as a whole. However, when you look at the S&P 100 over here, notice Tesla is up 10%. This did gain ground throughout the session on an upgrade. Again, people talking about their AI technology, et cetera. Whatever it is, I think to some degree that's kind of window dressing, the idea that we're just kind of making Tesla look better than maybe it is and maybe it's not. But in our current market climate, as an auto manufacturer, it certainly calls into question, how much demand we're going to see down the road as interest rates are still trading at very high levels. But we have a data-heavy week this week, and this could really give us a sense of where the consumer is and where prices are. So, for example, on Wednesday, we've got CPI. The core number obviously is going to be a little bit lower in line with last month's, but the CPI year over year, CPI month over month, because of the rise in energy, specifically gasoline, we're going to see a big bump in the headline number and potentially a decent sized bump in the year over year number. So the question is the Fed on hold, and are they likely to cut next year? As a result of what we're seeing from inflation rising on a year over year level and on a monthly level, we might say no, but you might say, well, yeah, but core, once we strip out the volatile components of food and energy. So the question is, what matters to the Fed? Well, if we look at the Fed's preferred measure of personal consumption expenditures, or PCE, you might be looking at the PPI numbers that are bleeding into the future movement of personal consumption expenditures. Again, notice the headline expected to rise. Notice that the core is expected to decline. So we're going to have a very, we're going to get these data points to really help us understand the direction of inflation. Are we about to see inflation start to pick up as we move into the end of the year? As we look at retail sales, a number of retail companies were experienced some unusual option activity today. There was a very hot print in July, expecting 0.4% for August. So we'll see, again, how is the consumer's health? As we look at regional Fed manufacturing indices, again, looking at contraction, but maybe better than the last print. We could look at some key components of that survey and determine, are we seeing that new orders are up? Are we seeing that employment is strengthening? What's happening with industrial production? Expected to decline month over month. But again, how do we come out? So we have a lot of data points to really look at that are frankly probably reflective of future Fed policy and are reflective of the state of the economy, including Thursday jobless claims, the weekly report at 225, an uptick from 216 last week, expected this week 225. So the inflation stuff certainly is creating an atmosphere where we're going to start to price in what is the Fed's next move. And at least for today, that didn't really seem like there was a cause of concern, at least for a couple of names. Tesla, well, if you notice here, cyclicals were up 2.69%, significantly outperforming the rest of the sectors. When we come in and you look at and break down what is in XLY, what is in the, private XLY top holdings. So I made sure I had all these up to date here today, but we've got Tesla at 10%, Amazon at 3.5%. Notice Amazon breaking out today on above average volume. Notice if we draw a trend line down across the highs, it's not necessarily a inverted head and shoulder, but again, certainly looks like that with a shoulder ahead, another shoulder breaking out today. You look at the potential range from 142 down to 130, $12 on the break here of 138, maybe has 150 in store here. So I walked through some unusual option activity last week, and on Thursday, this was an 8-step 138, so it was just for last week's expiration. But we talked about the idea that if the market's going higher, Apple certainly right now, there's a bit of an impairment trying to price in some of the news from China. Well, what's likely going to lead? If we look at option activity, Amazon and Google were the ones that were probably likely to lead off of last week's unusual option activity on the 28th of August for Google specifically. And generally speaking, Google has been up, but Amazon up 3.5%, Tesla is up today. As you go through the other components, Starbucks, Lowe's, McDonald's, TJ Maxx, Home Depot, Nike, Orly, right? I mean, Nike's a retail company. We're going to have retail numbers this week. There was some significant option activity in Nike out for March, way out of the money here, right? So we go in here March, a bit of a reach here. Sorry, that's April. This is March. But reaching out here, 2,000 contracts traded at the 125 strike. But that's not going to have any sort of gamma effect on Nike. And you'd probably want to see some sort of reversal. In fact, we saw the early strength reverse into late day weakness, and we're on the verge of closing below the low of the 23rd of August. And there are a few of these kind of stocks today that showed early strength, like, for example, an American Eagle gapped up a little bit, sold off. GPS, some bullish option activity, early strength, faded, and sold off into the close. And Foot Locker, as we look as well today, bullish option activity coming in at the 22nd SEP 20. Let's look in here really fast. Out here at the 20 strike, right? So this kind of early kind of bullishness in these long calls ultimately faded by the end of the day, which shows, look, if we look at high beta SPHB, this is a high beta index ETF, notice how we gapped up early and faded late. As we look at the low volatility LV ETF today, notice this stayed strong throughout the course of the trading day as low volatility names outperformed high beta names. And as we look at this, we have to look and say, look, I mean, this is not necessarily the most bullish scenario that's playing out right now, but it doesn't mean the market can't necessarily push higher, and we'll see. We finished near the high of the session. We have a 61% level at 450, a resistance level of 451, 451 and a half, 452. I think if we take out this area around 450, we have a pretty good shot, or 451, 451.50. We may have a shot of retest the prior high at 460. I think that'd probably be on the back of maybe, an Amazon or Google, but ultimately I think Staples and utilities are probably going to have to be some leaders in being able to do that, as I think the broader economic circumstance is probably going to point lower. However, we can always potentially see a short squeeze develop. And if that's the case, look for high beta to outperform, right? These high beta names, the ones that should outperform if we're experiencing a short squeeze. And the failure to do so today says this short squeeze may be on some life support here. So now if we consider one area of the market additionally that was fairly strong, apart from consumer staples and low volatility or low beta names, it was cannabis. And I've kind of addressed a lot of option activity in MSOS over the last week after the breakout on the 23rd. And it's moved an additional, almost $3 since then. Tilray finally came back around from the breakout we saw on August 8th. Kind of a failure of it to really see that continuation of the short squeeze. But over the last week, we've seen some more important news come out that might be impactful for cannabis, making a Schedule III drug, possibly the road to legalization. Ultimately, this is leading to a positive news cycle, and ultimately what? A potential short squeeze, as many of these stocks have higher short interest, the positive news cycle, the upward move in the price, and other option activity may help propel these stocks and push higher. So certainly today is a breakout in Tilray, heavy volume. We finished at the high of the session. And again, there may be more room to run out of these names. And the good thing about this is that for many of them, you'll notice that there is some relatively good positive skew. So, for example, you could buy a 350 and sell a 450. You're paying 124% vol, selling 146. And 450, certainly that's a pretty decent leg, carries you back to the prior highs. Is that likely to happen in 11 days? No. But again, we're talking about a short squeeze candidate. You might be able to go out a little bit further and still benefit by the rising vol structure. 350 and 450 are buying 111, selling 124 for about 20 cents on a $2 wide spread. So 450 certainly seems like it might be in view. We do have some resistance from September 5th at 340. So, cannabis is one of those things. I mentioned that the market's got the munchies. After seeing what Tesla and Amazon are doing today, what's going on with consumer staples and Google, obviously a big part of communications along with Meta, you get the sense that, look, there may be a chance for the market to run maybe with slightly different leadership this time. And of course, that the movement in Tesla does a big part of ARK as well. So it has impact on lots of funds being a very big name, as well as Amazon. So again, these have a chance to continue to push the market if they can continue to show strength. And maybe the lead stocks like Apple and other names up from the bootstraps here. Apple finished up 0.66. Microsoft finished up about 1%, slightly better than the market generally. So traders will have a tendency to go back to a lot of these names that are relatively tired, but again, typically you see them go back to the same names that made the money previously. And again, we led with Amazon and Tesla. We may see it now with some of these other names. Apple probably being the laggard, at least in the near term. But again, this may play out. And Staples, KHC is an example here. KHC is up 2%. There was a long call activity back on the 5th of September. Also today in KHC, this was a 22 SEP expiration, and they're buying the 34 calls out here. So the vol structure, 34, 35 is pretty favorable. That's 11 days out, so it's got to move quickly. 35 certainly a little ways away. Certainly the price of this spread reflective of the probabilities, which are pretty low, but you can get out here just a little bit further, and the implied volatility dynamics are somewhat similar if this is correct, but you have to stretch it further to 37.5, which is all the way out here. 35 is right here. So you're not able to get quite as close until you start to get into the weeklies. And so in this case, just not a lot of open interest. So again, you might favor XLP or stay in the monthly or the shorter term weeklies here. And even just maybe buying a short dated call, looking for a big move. Break even's 34.21. So again, just looking for that to pop in the near term. And we look at a 61% retracement at 35.15. Boy, if we could get there, it gives you a chance to roll. That call is only going for about 20 cents, so 21 cents. So anyway, some interesting dynamics playing today. So obviously we got to KHC, Kraft Heinz. Another area, and we saw a bit of movement today with the US dollar / JPY, the yen. And this is relatively significant. We've seen past moves, and as we've seen selling in the market or just general weakness. But today it's not down a lot. But the news from the Bank of Japan was interesting in that we may be looking at the end of yield curve control, maybe by the October meeting. So that means you're basically buying an unlimited amount of Japanese government bonds at a specific yield because you don't want yields to go higher to increase borrowing costs on the part of the Japanese government. They also have negative interest rate policy. So I got NIRP here. That means what? We're trying to push money out of the banking system into the money supply, trying to drive credit growth, et cetera. And then we have we have quantitative easing. And obviously quantitative easing is a part of yield curve control, but it's not necessarily part of it. That's where they're buying Japanese government bonds, they're buying REITs, they're buying ETFs, a broad swath of stuff. And as we look at this and consider what the policy is of the Bank of Japan, with maybe close to a 300% debt to GDP, maybe it's 250%, it's high. It just reflects the notion that, look, they are in a very, very difficult position. And guess what? We have followed the Bank of Japan pretty directly in our monetary policy. Last sell-off in the 2020 timeframe, we bought We bought junk bonds. We bought bond ETFs, corporate bond ETFs, and we stepped in. And is it a far cry from stepping and buying equity ETFs? Probably not. As we look at the list of stuff here, this is probably next on the docket into any sort of major, a correction or possibly recession, what the Fed's next move can be. But the problem is, Japanese inflation has been steadily rising over the last couple of years and now surpassing, at least for the moment, that in the United States. And so the question is, what are they going to do? Potential yield curve control may come off in October. Negative interest rate policy may come off maybe early next year as they tack towards higher interest rates, assuming that they believe, inflation is going to continue to rise. And so again, you can see the pickle that they're in demographically in terms of debt and the monetary policy to try to grease the wheels of a stagnant and continuing slowing economy and rising inflation now. Boy, it's kind of that pickle you don't want to be in, and there's not much room out. And that doesn't mean the Fed has a lot of room out in the United States. It just says, look, that's where we're going. And unfortunately, so we are going to use Japan as the model, as we've done for the prior 20 plus years. But anyway, so if we start to see the yen break as a result of tighter monetary policy from the Bank of Japan, this may represent further weakness in the U.S. markets as capital flies back to, from dollars to yen and away from our markets. So we'll have to see, we'll have to track to see what happens. But this is one to watch as the yen may be poised to strengthen, and that generally accompanies some weakness or modicum of weakness in the S&P 500. As we look at some other option activity that happened today, as we kind of think about bonds at the moment, HYG, these are junk bonds. Right now, they're probably enjoying a pretty tight spread between junk bond credit interest rates and the federal government's interest rates. You could use IEI as kind of a proxy here of where U.S. government interest rates are for 3 to 7 years. HYG has a similar duration, probably closer to 2.5 years versus 3. But if we measure the relative strength of these, what you'll notice, the yellow line, since May has recovered nicely. In the last kind of month, we may be seeing some sort of potential reversal here as credit spreads may begin to widen, meaning that the rate that junk bonds borrow at relative to treasuries with a similar maturity may start to widen, very similar to what we saw back in March 3rd through about the middle of March here. And if you look at what happened to HYG during that March timeframe, notice that it didn't exactly result in significantly lower prices. We began the sell-off earlier. So watch the breakout here in HYG, watch the relative strength. But today's trade in HYG specifically does not bode well for bonds, right? And for borrowing costs of public companies. We've seen a surge in borrowing over the last week. And you'll notice here specifically the 66 strike, some other stuff being closed out. But buying out here at the 66 strike for December, that's a relatively short amount of time for this to get down towards 66. So again, are we pricing in the potential of a major correction, maybe recessionary conditions hitting before the end of the year? It's a real possibility. Maybe not likely, but it is a real possibility. On dollar weakness, you might expect EWZ to surge, what we saw today. Nice big movement, up 2.45%. A proxy for emerging market currencies is the Aussie against the US dollar because of its weighting towards China. It had a nice upward move off of support. So a stronger Aussie against the US dollar does portend pretty well for emerging market currencies. And we did see EWZ bounce off support with additional upside to maybe 32.20, possibly 33, and maybe 34. As we look at today's trade in EWZ, this was a 29 SEPs. We're out here just a little bit, about 18 days, 21,000 contracts here at the 32.50 strike. So again, near-term target 32.50, but break 32.50 could create a bit of a gamma squeeze, pushing it to 33 or 34. So something to watch. And VALE has enjoyed, and I talked about this during my Friday session about looking at steel as an area of potential strength. It was not manifested in Cleveland Cliffs, CLF, or X, despite the bullish option activity in U.S. steel. But we did see it in VALE. This is a Brazilian iron ore and steel company. And so X is sitting right now in a symmetrical triangle of lower highs and higher lows, awaiting some sort of breakout. And today the trade was in October's expiration at the 31 and 35 strike. Again, long call vertical, $35 would be kind of the upside projection here. And again, that probably dovetails pretty well with a breakout from the symmetrical triangle we've seen over the last little bit. One last stock here, we'll look at UPS. So as you consider oversold stocks, maybe you're looking for a bullish trade, UPS did fade towards the end of the day. Now you could look at the highs here at about 162.50, but this has a potential for a rebound back to 165, 166, 168. And as we look at today's trade on UPS, it was a September expiration. So we got for this week at the 165 strike. So again, call buying at 165. Again, representative of maybe an oversold bounce. Never got any traction today. So again, you might look for a trade through the high of about 162.50. May help propel it to 165, which is the 1/3 retracement. We start to break that. May help create a little bit of gamma squeeze towards 168, possibly higher. My guess, we're probably looking for some sort of oversold bounce to 165 to 168 levels in the near term. And folks, what we got for today. We'll catch you back next Monday on the video. You have a great week and watch the data this week.